Welcome back, my dear students. In the previous lecture, I have discussed about the concept of trend analysis on a price action chart. So in this lecture today, I am going to talk about the multi-time frame analysis on a price action based technical analysis. This analysis is one of the simplest tools that will help you in reducing loss from your trade and this time frame analysis to identify your trading opportunities. So multiple time frame analysis is simply the process of looking at the same pair and the same price on different time frames. That means you can use many time frames to place your trade at the same time. You can also look the higher and lower time frame to make your entry, so that you can make entry to analysis of different time frame. Trading time frame are commonly classified as long term, medium term and short term. Here the long-term trader will usually refer to daily and weekly chart, and the weekly chart will establish a long-term perspective. Suppose you can trade in a long, then you see the higher and lower time frame for analyzing the trade. These are the more favorable for long-term trade. Medium term use hourly time frame and trade for several hours to a week. And short-term trader use minute chart such as 1 minute, 15 minutes and 30 minutes etc. A higher time frame is used to find the overall market direction and lower time frame is used to find an entry for a trade. So the best time frame for trade any financial market will depending on the trading strategy meet your specific goal. If you trade on a 5-minute chart, then you should have your eyes on 30 minutes and 1 hour chart. If you trade on 15-minute chart, you should be checking out the 1 hour and 4 hour chart for confirm the reliable trading position. You should eye on higher time frame because higher time frame which will give you the best price action pattern and best trade opportunities in the market. The multiple time frame analysis can be used for counter trend trading. Using this analysis, it will help in combining the benefits of reliability of higher time frame and also reduce the risk of a lower time frame. When you can trade as long, then you focus on daily chart or weekly chart to identify the primary trend, and below the 1 hour chart for identifying the short-term trend. So you should make a decision to go long or short based on your trend direction, and the return to your preferred time frame to make decision about where to enter and exit. So not more today. Have a nice day. Goodbye.